Hey, it's Rob. Welcome to Everyday Investor, the hottest investment show in the world. That's right, I said it. I don't care who knows it. This show is designed to help us grow our money. You see, we take our precious time, we go to work, we get a paycheck in order to eat, in order to provide, and that's a good thing. But imagine a life where money could make you money, you could work a little less if you wanted to, and then you had this time to spend it with family, friends, purpose greater than yourself. That's what Everyday Investor TV show is all about. Remember, whenever you're faced with any type of investment opportunity, you always want to ask 4 questions to start. Number 1, what is the return on the investment? 2, what is the minimum amount needed? 3, what is the risk, the worst case scenario? And then you also want to make sure, when do you get that return along with the money that you put in? I'm super excited about today's show. We're going to be talking to my good friend, wait for it. On today's episode, we're talking to expert condo investor, teacher, trainer, Costas Kivelos.
So the developer's lawyer holds the money in trust. So they don't build with your money. They build with construction financing, usually from large pension funds and the big banks. So if these corporations are lending out their money to the developer, you know it's a safe investment.
At Theta Training, our goal is to help you achieve financial freedom by teaching you the foundations of trading stock options. Join our growing community. Learn through our live-streamed weekend course, or develop your skills at your own pace online. Understand how the stock market works and how you can use the options market to earn additional income. Achieve financial freedom and live life on your terms. Let us help you build your empire.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rob. Welcome back to Everyday Investor. Super excited to talk to my brother, to talk to a mentor, everything condos. We're going to learn how we can make money investing in pre-construction condos, specifically on today's episode. But before we talk to Costas, let's find out what's happening in the world of stocks. Over to you, Omar Khan.
Thanks, Rob. Omar Khan here, guys, with Data Trading Weekly Market Update. The markets continue to move higher. Now, this is a little bit unusual. Summer, generally speaking, the markets don't move higher. Statistically speaking, like September, October, August, they're not great months, but the market has kept moving forward. Why? Well, one of the main reasons is because earnings have been really good. The amount of money companies are making, that's been really good. Secondly, the Federal Reserve met a few days ago, and they said that interest rates, therefore inflation, is not a major concern. So interest rates going up is not a major concern. So people have nowhere else to put their money except for the stock market right now. And you're seeing a lot of money come in the stock market, which keeps propelling it higher. It keeps getting all-time highs. But keep in mind, we're hitting September and October. And statistically, these are the 2 worst months of the stock market. So we'll see how it does. But for now, economy is great. Companies are making a ton of money, and the market keeps moving up. Back to you, Rob. See you guys next week.
Thanks, Omar. Always great to learn from you. Costas, always great to learn from you as well, my friend. How are you?
I am doing fantastic. I'm sure you're having a great summer as well. Very exciting time in the world of real estate, and I'm happy that I can sit here and share it with you and your viewers.
Yeah, no, it's great. You are one of the go-to guys. I mean, I think there's only a handful in all of the GTA that, the builders give their inventory to teach people and to sell. I think you're, what's the label that they kind of give you in the city? The platinum agent? Is that what it is? Or
yes, that's what it is. We're termed platinum agents. So a lot of people hear VIP. We're actually ahead of VIP. We're the first people that get access to units. And as you know, when it comes to investing, timing is everything. So when you get in first to a project, you get the best price, and it's all about return. So you want to get in first, you get the best price, best units, best incentives. And it's really the only time to buy if you are doing this to make money.
Time is short. This show flies by, so I want to kind of get right into the meat of it. What's the difference when someone says, I want to buy a condo as for an investment purpose? I don't want to have to deal with, the lawn. I don't have to deal with big repairs. And so I know I want to invest in condos. What's the difference, they say to you, Costas, between the pre-construction condo, buying it kind of before it's even built, as opposed to the resale, somebody that needs to get out and wants to sell it to me?
Well, that's a fantastic question, and it's one of the ones that I'm very excited all the time to answer. And the significant difference is when you're buying a pre-construction condo, you don't have to do the things that you just said. You don't have to be a landlord, which entails maintenance, paying property taxes, paying insurance, answering and addressing your tenants' questions, needs, and wants. All you're doing in pre-construction, I'd like to say, is you're just cutting checks. You're cutting checks to purchase your unit. You want to make sure that you buy with a platinum agent, so you buy in the first round when prices are the lowest, and the majority, the bulk of your appreciation occurs while the unit is actually being built. So you're making the bulk of your return on your investment while construction is happening. And it's when you're actually just sitting back and watch your money grow.
And how long on average, I know it depends, but on average, you've been doing this for a long time and you've decided to niche into, you can sell all things real estate, but and teach all things real estate, but you've decided to niche in on pre-construction condos. How long does it take? So if Rav were to invest in, one Yonge Street, if you will, how long would it be before it's ready to be occupied?
Well, when we're dealing with people's money, we want to make sure we're conservative and we give accurate estimates and err on the side of caution because we don't want to promise anything. You'll hear people telling you that, places will be built in 2 years. Realistically, what you want to use as a rule of thumb is if you're 14 stories or less, it's going to be about a 3-year build and it'll take about 6 months to register. So you can't sell it until it registers to get your maximum appreciation. So you're looking anywhere from about 3.5 years to 5.5, 6 years for a 70-story tower. So you think about it as a locked-in investment.
Yeah, to me, the longer the better, because obviously real estate goes up and down upwards, especially when you're investing in the GTA and even on the outskirts. Places like Hamilton, places like, I want a 5-year deal because I know I'm paying at today's price. But when it's ready for Rav to do whatever I need to do with it, it's 5 years from now. Now, what's it going to be worth?
That's
right?
Definitely the case. And we're one of the few investments that if it takes longer to get your money, very few people are disappointed and they actually have a larger smile on their face.
That's right. That's right. And what is the investment amount needed usually? I know it all can fluctuate, but generally speaking, how much do we need to invest?
Well, the way it works is that when you cut your checks and you give it to a developer, it's actually made out to their solicitor. So the developer's lawyer holds the money in trust. So they don't build with your money. They build with construction financing, usually from large pension funds and the big banks. So these corporations are lending out their money to the developer. It's a safe investment. So what happens is you need to put 20% down so the developer can get their construction financing. And this is spread out over a series of payments, whether it's 2.5% or 5% payments. And usually it's 20% over the course of a year and a half. Now, because of COVID, and I like to call it the silver lining on the COVID storm cloud, we're seeing deposit structures where that final 5% is pushed even further till when you get when you actually get the keys, a term that is known as occupancy.
Wow. So really, my return on investment, I have to be calculating at 5% and then later at 10% and then later even at 15%. So the return is actually even higher. You have projects that are happening all the time. Your information's on the screen. Anybody's watching, if they want to be able to see these opportunities, they sign up under your VIP program. But you have been talking about where an area that you love is in the Hamilton area. Talk about Hamilton. You did a deal just recently there, but you said there's a big one coming here. I'm talking to you right now. Here we are when this airs, kind of Labor Day weekend, 2021. When is the next big deal happening in the Hamilton area for you, would you say?
We're looking at close to 1,000 units being launched early 2022. And it's by one of my favorite developers. What, my opinion, they're new, they're hungry, they have a 30-year plan set in place, and they have access to $1 billion at all times. So they check all the boxes. And we actually sold a project for them near the end of the first quarter of 21, and it sold out in one weekend. 350 units plus one weekend, all sold out. And this was at the foot of Jarvis in Hamilton. Now, a little known fact about Hamilton, where the GTA saw rental rates drop during COVID, Hamilton's actually increased. So the cost to rent a unit in Hamilton went up while the rest of the world around it actually saw them go down. And that's a testament to the strength of the Hamilton real estate market. And we expect big things for Hamilton. A lot of money is putting into it at the federal, provincial, and municipal level. And we're seeing developers follow this and a lot of developments coming to Hamilton. I say it's the hidden gem in the GTA for investing at the moment.
Yeah, and I know there's great deals that are, I mean, you just did one in with the same builder in downtown Mississauga. And then,
Yes.
you know, prior to that, we did them right downtown. You know, we work, I work with Graybrook, and you're familiar with Graybrook, and
Yes.
you know, all the different kind of developers that are out there. So anywhere in the GTA, including in Hamilton, it's great as long as the numbers kind of make sense. And I know you're extremely bullish and have been, and you know, you've helped a lot of people make money there. Talk a little bit about the importance of a great developer. I mean, the developer of this widget, if you will, that happens to be housing condominiums, it's of the utmost importance, no?
It is of the utmost importance. And this year we saw an anomaly in construction in general. We saw a massive increase in construction costs, and we experienced 30% increase over the course of a quarter, okay? Now, when that happens, developers that don't have the experience that they should, they can run into problems. Because remember, these condo projects are a business, and for it to be profitable, that means it's gonna get built. And if at some point something breaks along the chain, there's a chance that your project won't get built. Now, in my experience, I've sold over 100 projects and hundreds of millions of dollars I've invested for my clients. And I've had one project out of close to 100 go bankrupt. And even when that happens, because you like to say, what's the risk involved in the investment? Every investor still got their money back. The problem is you lose the appreciation. And as we know, money is a depreciating asset, because what $1 will buy today, it can't buy in 3. So that's what you actually lose. So it's a small loss, even though it is a loss, it's insignificant in the whole scheme of the game. And that's why you want to make sure, because of unforeseen circumstances like rising construction costs, you want to have a developer that has a track record that's proven, builds a quality product, and gets to as close as time as can be possible.
Love it. Always educated when I listen to you speak. Let's take a quick break. We'll come back. We'll take a look at the numbers just on a project, and we can, whether it's Toronto, Hamilton, we'll just kind of walk through a little bit about how a very simple way that investors make money investing in pre-construction condos. We're talking to my good friend Costas. Don't go anywhere. We'll be right back.
At Theta Training, our goal is to help you achieve financial freedom by teaching you the foundations of trading stock options. Join our growing community. Learn through our live-streamed weekend course, or develop your skills at your own pace online. Understand how the stock market works and how you can use the options market to earn additional income. Achieve financial freedom and live life on your terms. Let us help you build your empire.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rob. Welcome back to Everyday Investor. I'm talking to my friend Costas. He's teaching us how we can make money investing in pre-construction condominiums. Before we do that, let's find out what's happening in the world of mortgages with mortgage expert Kyle Ford. Over to you, Kyle.
Thanks, Rob. Let's talk commercial. So many times I hear investors come to me saying they want to go commercial, so the bank's not looking at them personally anymore and just looking at the property. I want to dispel this myth right now. When it comes to commercial financing, the bank or lender is absolutely going to look at you personally. They're going to look at how much you earn, your other debts, and your overall financial picture. The difference between residential financing and commercial financing is the loan amount for commercial is based on how much income the property produces, not your personal income. So your personal income and your personal financial situation will be heavily looked at and heavily scrutinized, just as it would be in residential financing. But the net loan size will not be based on your personal income, but based off the income that the property produces. For any help or questions or concerns around commercial financing, don't hesitate to reach out to myself and the Kyle Ford financing team. Thanks and have a great day. Back to you, Rav.
Thanks, Kyle. Always great to learn from you. Costas, thanks for being on the show. Thanks for your hustle. Thanks for your intellect. Always great to be able to learn what you're doing and what you're seeing in the market. Let's take a look at an example really quickly here. So, let's say we're in Hamilton, and what are we selling right now in Hamilton per square foot?
We're around $800 a square foot in Hamilton. $800 we'll say per square foot for smaller product, and we're around $700 for larger product. But the majority of people like to get into the market with a smaller unit, so let's go with $800 a square foot.
$800. Okay, so $800 as opposed to in Toronto,
$1,500.
So almost half.
Almost half, and that's what we want to compare it to. If you go right into the heart, the core of Toronto, you're looking at close to $1,500 a square foot average. And in Hamilton, the average is actually lower. It's about $750. So realistically, we're about exactly in half. And that's why it's a great opportunity for people who might think they can't afford to get into this. That's the investment where they can actually afford to get into and get their feet in the market.
Okay, so in Hamilton, and we know transit's right there, that it could take me right downtown Toronto with Go Bus and all that kind of stuff and all the things that they're building. But for an investor, Costas, what am I looking for? Like, I know in Toronto, I can get buy a place for 400 or 500 square feet, and it's going to get rented out because there's a single professional there. He doesn't need a lot of space. What kind of product am I looking at entry level for a first-time investor in Hamilton? How many square feet am I looking at?
Well, you'd be surprised. Even though Hamilton is outside Toronto, they're starting to build similar-sized units, which I call space saving, because essentially the larger a unit, the more you pay because it's based on per square foot, and you won't necessarily get any more rent for it. So you will get one bedrooms around 500 or even less square feet.
Really? And so that's okay. So if I want 500 square feet, and you're saying I times that by 800, so I can buy a property for $400K, an investment property?
Yes, you can. You could have got a beautiful one bedroom for just under $400,000 in Hamilton. And in Toronto, it's impossible to find one for under 500. And realistically, that's Mississauga. If you get into Toronto, you're mid to high 600s for the same product.
Okay, so $400,000 I can get in, and so my down payment, you said, is about 80% or 20%, and that doesn't have to be all at once, but just for giggles. So I'm in for 80K investment. Correct?
Yes, sir. Correct.
And so when you look at this, you said this is going to be about a give or take 5 years, like the one that we did at One Jarvis, or the one that's coming in the next 4 or 5 months. How long will those take?
Jarvis will take about 4 years, and this other one, because it's a larger project, it may take 5. So let's go 5 years.
Okay. So here I am. This is going to take me 5 years. So here's the magic question, and I know you like to be conservative, and so do I. This today I'm buying at $400,000. What are we seeing at a very conservative increase year after year in the downtown Hamilton area?
This comparable return to Toronto, and the difference is because it's a lower purchase price, if you gain the same amount, it's actually a larger gain because it's a greater percentage increase. So you're looking at about a 50% return on your deposit year over year for the course of the 5 years. So that
50%.
unit, yeah, it's Hamilton is booming, and that's what we've been experiencing in Toronto. But if you want to be conservative and drop it a little bit, it's still a fantastic number. I'm forecasting in 5 years, your 80,000 could pretty much get you up to a $200,000 return.
Wow. So you're saying in your mind, you think that I buy this for $400,000, that in 1 year, this is just Costas, we're not going on record, this is just you, that this thing could be worth $600,000 after 1 year?
Not in 1 year. I'm saying after 1 year, if you purchased it at 400, after 1 year, that should be worth 440, about 440.
Oh, 440. So 10%.
Over the course of the 5 years, but you're saying 10%, but that's 10% on the purchase price. On your money, that's a 50% return because you've only invested 80.
Got it.
So that's the beauty of this investment. You're leveraging the purchase price with a minimal down payment. So the gain is massive. And that's why this is such an attractive investment. A little known fact, and you know me, I'm all facts and stats. The GTA sells more pre-construction condos than any other city on the planet 4 years in running.
Yeah, and that's because there's a big demand and we don't have the supply to meet that demand.
Exactly.
Got it. Yes. Okay, so what you're really saying is, so let me just get all this way here for a second. So we're buying for 400K.
Yes.
You think this is going to make 10%, which equals, $40,000. It's a piece of paper.
Yes.
It's not liquid. But I'm only in for 80K, actually not even 80K, because that's 1 year. And in my first year, I didn't put down $80,000. I might have only put down, 40,000 or so on and so forth. So in a sense, it could even be 100%. But the point that you're making is, if you say 10% on this, I'm only in for 80, that's where you're getting your 50%.
And that's what it is. And the reality of the matter, you hit the nail on the head, Rav. In the first year, the developer requires 10% in its coffers to receive its first construction loan to start demolition and excavation. So in the first year, you're going to put down 10%. 10% is 40,000. Your unit should go up 40,000 in that first year. So for that first year, you've actually made a return of 100%.
No, I like your style. Now, when somebody's watching this show, and I know they're, all excited about this and so on and so forth, we have to always go into an investment knowing kind of the exit plan. And so you don't want to put somebody in this if they think they're just going to flip it or assign it, or they may be able to do that. But when you educate people, you say, no, have a plan to maybe hold it for a year or two. Is that correct? Maybe I'm not correct on that.
You've been listening to our conversations and I love it. You're 100% correct. And I like to tell people, think of this as a long-term investment, not a 10, 20-year investment. But if it takes about 4 to 5 years to build it, give it 1 to 2 years while it's being occupied and then sell it. That's the maximum appreciation time, 1 to 2 years after occupancy. That is when the appreciation wave is at its highest, and that's when you will make the most money. Now, there's changes in our life, divorce, illness, all these things that we don't want to happen, but it's unavoidable. It's part of life. There is an early exit plan, and that's called an assignment.
Okay, but so what you're saying is, if I buy this here, and then 5 years later, we're ready to rock and roll here, you're saying if I want the biggest bang for the buck here is wait till, I buy it in January 2022. It's going to take about 5 years to build. hold it, rent it out, the numbers will still work, especially on the purchase price that you gave on that, correct? Like I'm not gonna have tons of cash flow, but I'm also not gonna be incredibly negative in my bank as well, correct?
You will never become rich from being a landlord with 1 to 10 properties, okay? But if you can break even on them or come close to it, and you will be slightly cash flow positive is the forecast, especially in Hamilton, you will be making a substantial ROI on the actual appreciation of the unit, and that's why it's okay. So you want to keep this like you outlined for about 2028 to 2029. That's the sweet spot to sell this. But in the meantime, you've amassed so much equity that if you want to put your head back in the game, you can refinance it, pull out equity, and that original 80,000 can buy you a new condo.
Yes. Okay. So why do we not like per se? I mean, not that we don't like it, but this shouldn't be the game plan. This word called assignment. And first of all, explain what assigning means.
When you purchase this condo, you get a piece of paper, you get a purchase and sale agreement. And essentially what that is in a nutshell, it is your agreement which allows you to take title first from the developer. You don't actually own a unit. So if you want to sell that piece of paper, it's called doing an assignment. In other words, paper flipping, shadow flipping, there's all these terms in the media, but essentially you're assigning the rights to take title.
Okay, so I bought this for this, and let's just say for giggles, it's now worth this, kind of before closing. I want to sell this to Bob, and I say to Bob, Bob, you can have this property for $650 because I'm so generous. It's worth $800. He can have it for $650, but I'm happy because I bought it at $400, so I'm making $250,000. Bob's happy because he's buying at a $150,000 discount. So that's what people see, and they get all tickled about it. But Costa says this is not the number one way to invest. Why? Why do you not like this as a first way of thinking? Of course, if we have to, we have to. But why is Costas not the biggest fan?
I'm not the biggest fan because there's fine print associated to this deal, and you always need to write the fine print. And it's one of those situations where at first glance, you're making $250,000, fantastic. But what happens is, because you're not actually selling real estate, you're selling a piece of paper, the CRA deems this as income, not a capital gain. And there's serious tax implications to that. An example of which is income gets added to your taxes for the year as income. So you just added $250,000 to your year's taxes, which means you automatically jump up to close to a 50% tax bracket, which means half of that $250,000 is going directly to the government.
Got it. So that's one reason is I'm taxed on this 50%. Because it's not a capital gain, because it's not real estate, it's just flipping the paper. So that's one. I mean, you've told me many reasons, but right there alone is this guy might not be making $250, he might be making $125.
And the difference between a capital gain and income is a capital gain, you take 50% of your net gain, and then you're taxed on that. So the maximum amount capital gain would be closer to $125. So that's a significant difference in taxes.
Listen, we don't have enough time. Time is already up, but I want people, if they have questions, I mean, I know this, I know the answer to this. People can email you, they can register for all the deals that are coming out. You kind of hold their hand through this. And,
Yes.
you know, you were telling me about a school teacher, your kid's a school teacher that you helped to get into a investment property. So, you know, all types of people. It's great, Costas, that you're able to do that.
Thank you very much, Robin. Any chance I get to come on your show, it's always a pleasure.
No, for sure. We'll be doing that. And thank you for being on. Thank you at home for watching. Without you, we would not have a show. We'll see you next week. Same place, same time. Honey, love you. I'll be home soon. Bye, everyone.